Welcome to The Explainer. Today we're diving into a massive billion-dollar deal that really shook up a piece of the Las Vegas landscape. It's a fascinating story about why a casino company would sell off its most valuable properties, only to then turn around and pay millions just to keep running them. Let's get into it.
Okay, so let's jump right into the big puzzle here. Golden Entertainment just sold the actual real estate for the STRAT and a bunch of other properties. But, and this is the key part, they're not going anywhere. Now, I know it sounds a little strange, but this deal is actually a masterclass in modern corporate strategy.
First things first, let's talk about the headline number, $1.16 billion. Yep, you heard that right. That's the price that VICI Properties, a specialized real estate company, paid for just the buildings and the land. For the seller, well, that's a huge injection of cash right into the bank.
And get this, we're not just talking about one single building. This deal bundled together a whole portfolio of 7 key properties all across southern Nevada. We're talking the STRAT, of course, but also spots like the Arizona Charlie's locations and resorts out in Laughlin and Pahrump, the whole shebang.
And here is the other side of that billion-dollar coin, $87 million. That's the starting rent, the annual rent that Golden Entertainment is now going to pay VICI Properties to keep the lights on in the very buildings they just sold. So who is this buyer with over $1 billion to throw around? Well, to really get this deal, you have to understand VICI Properties, who you could call the Strip's biggest landlord. You see, VICI doesn't run casinos. You can't go play blackjack at a VICI table. Think of them as the ultimate real estate mogul. They own the physical buildings, the prime land, and then they lease it all out to the companies that actually run the resorts and casinos.
And VICI is already an absolute giant. I mean, just look at their portfolio. They own the real estate for some of the most famous destinations on the entire planet. Places like Caesar's Palace, the Venetian, MGM Grand. They are, quite literally, the foundation that the Las Vegas Strip is built on.
VICI's whole strategy, their entire playbook, really hinges on this one concept, the sale-leaseback. And it's a pretty simple but incredibly powerful idea. A casino company sells its physical building for a huge pile of cash, and then, in the same breath, signs a long-term lease to keep operating there. VICI gets a reliable tenant, and the casino gets a boatload of cash. So for VICI, this deal makes perfect sense. It locks in nearly $90 million a year in predictable rent, which is fantastic for them. But what's really crucial here is that by buying properties like Arizona Charlie's, they also branch out beyond the tourist-heavy strip and get a solid foothold in the super stable Las Vegas locals market. Okay, so let's flip that billion-dollar coin over and look at the seller, Golden Entertainment. Why on earth would they give up their prime real estate? Well, it all comes down to one word: focus. So how did the market react? Well, investors absolutely loved it. They didn't see this as a company in trouble. They saw it as a really smart strategic pivot. Golden's stock shot up over 35% on the news. I mean, that is a crystal clear sign of Wall Street's approval. This whole move lets Golden become what's called an asset-light company. So instead of having all their money tied up in owning buildings, they now have over $1 billion in cash to play with. And that money can be used to improve the guest experience, modernize their casinos, to focus entirely on what they do best, running the show. And here's the guy behind the move. Blake Sartini, Golden CEO, who's also taking the operating side of the company private, put it really plainly. He framed it as a direct win for investors. This wasn't about getting rid of assets, it was about unlocking their true value. But, a deal this big is never a sure thing. It is a high-stakes bet, and it's got potential downsides for both sides of the table. So let's break down the pressures each company is now facing. This deal really creates a whole new set of risks. For Golden, that $87 million in rent is now a massive fixed cost. If the economy takes a nosedive and revenue drops, that rent payment doesn't change. And for VICI, well, their investment is only as good as their tenant. If Golden struggles to pay that rent, VICI's entire cash flow model is in jeopardy. So let's zoom out for a second. Beyond just these two companies, what does a huge transaction like this signal for the future of Las Vegas itself? At its core, a $1.16 billion investment from a savvy, major player like VICI is a massive vote of confidence in the city. It's a bet that Las Vegas tourism, its conventions, and the local economy are all on a path for some serious, sustained growth. What this deal really highlights is a major trend that's shaping the entire industry, a strategic separation of duties. The new model is really simple. Let the real estate experts own the land, and let the hospitality experts run the show. Each company gets to focus on its core strength, and in theory, they both become way more efficient. And that really brings us to the biggest takeaway of all. This billion-dollar handshake might just be the blueprint for the casino of the future. As the land on the Strip becomes more and more valuable, are we entering a new era where, in Las Vegas, the house doesn't actually own the house anymore?